And we're live from the Living in Jacksonville channel. Hello, everybody. We got a full party tonight. We got Miss Rachel, as usual, co hosting. Got an amazing show ready for us tonight as well. Thank you for that, Miss Rachel. And then we have a special guest, my man Brian Jacobs, our favorite lender, to give us some insight because we're talking about the cost of living in Jacksonville, Northeast Florida, the suburbs. And then we're going to talk about how, with interest rates been high for so long, how these incentives are really helping us because we've had so many challenges out there. And there's no better person to talk to than Brian Jacobs, who's been in the business for over 10 years, and he's one of our preferred lenders and preferred lenders to the builders here in Northeast Florida. Thank you, folks, for joining us tonight. I am kind of like in a mess because I had to come back to my office because I didn't have internet at the house last minute because of that massive storm. So I know, Rachel, you felt it. You lost power, right?
Yeah, we lost power for about 2 hours. I was a little worried I was starting to get concerned about all the food in my fridge, but power came back, so I'm good.
Yes, it did. We had 5,000 homes that in the area that went out of power. Brian, did you lose?
Wow. Luckily, nothing. It's barely a drizzle over here, so we're
Okay.
good.
Did you get
Yeah.
lightning?
No,
No.
I
Okay.
didn't even hear lightning. So yeah.
Clearly, we're in the wrong part of St. Johns County because you had
Yeah.
no lightning and we ran out of power and we had lightning. So, all right, cool. So if you guys are watching or you're watching a recording, would love to know where you're watching from. Go ahead and make sure you comment. This is interactive tonight. If you have any questions for anything regarding lending or us regarding real estate or the Jacksonville area, please go ahead and make sure you add it in the comments. And of course, we'd love to know where you're watching from tonight or on recording for sure. And so this is interactive. Make sure you put your comments. And well, Brian, I only get you for a short while here. We'll run into it right now because you and I have been super busy lately. I feel like we're in a real estate market where quite genuinely, the job of a real estate broker or a real estate professional is not just finding somebody a home, it's helping them get into a home these days because of the affordability factor, right? We've been running in full steam since COVID in Northeast Florida, seeing market value go up 33% since COVID. And so it's become pretty unaffordable, if you ask me. And of course, that's that's debatable, right? I mean, that's subjective from where you're coming from because I still have people from Jersey going, "Wow, this place is cheap." With no income tax, we have better insurance, home insurance costs here than any other part of Florida. But there's still that challenge where we're dealing with these interest rates where they've been around 6.8, 6.5, 7%, all over the place. And so when the average home in St. Johns County is 550, the average home in Nocatee is 750. If you're not coming with a lot of equity, taking out a $500,000 loan at 6.5, 7% is not pretty. Then adding property taxes, home insurance, and all that. And the saving grace is that we have so much new construction here that we've really had to take advantage of what builders are calling incentives. And so Brian and I, we've been working on one today as early as this morning where we're literally having to get really creative as far as what we can do with this incentive money because the builders are offering these incentives so that we don't mess up the comps, maybe purchasing homes too low in a price because we haven't seen a massive decrease in real estate, but we're seeing where they're going. Here is 30, 40 grand. What you going to do with it? And we have to, the first thing I need to do is really understand where my customers, their situation, where they're coming from, and then go to Brian, okay, what makes the most sense if a builder's saying, here's $40,000 of flex spend, how do we utilize this best for the customer? And Brian, you want to kind of touch on that a little bit?
Yeah. So there's a lot of different. Geez, I'm hearing echoes in my voice here. So maybe your internet's still a little funky, but but anyways, yeah, we a lot can be done with that 40,000, and it just depends on the motivation of the buyer. It could be as simple of they need the extra money for to cover closing costs, or we need to use that money creatively to get them within a budget that they need to be in. Meaning, if the average rate right now is around 6.5, I mean, 40 grand, we can probably get it close into the upper fours. I mean, it can go a long way, and bring affordability
Yeah.
back to the area for sure. Um,
And the way we're doing it now is that we're literally going, all right, Brian, it's not so much about what house somebody wants or price point. We're literally going, hey, this family has this much income and this is how they're not house poor. This is what they can allocate towards a monthly payment. And we've had to work backwards, right? So
mhm,
it's weird because if somebody says, hey, for instance, we have an example, and not using names, but we had an example. Somebody says, look, my absolute max budget is 4,000 a month. And so I literally have to go to Brian and go, okay, Brian, based on all these builders and incentives. So some are saying, hey, we'll buy down the rate. Some are saying, hey, we'll buy down the rate and we'll pay closing costs. And I have to go to Brian and go, okay, what's the allowance to where we can allocate this money where it makes sense, where I can make it an offer to a builder on an inventory home or a quick move in, because that's usually where the deals are, where a home is practically done and they want to get it off the market.
mhm.
I say, okay, Brian, these people have $4,000 a month to spend. How are we going to allocate this 40 grand or 60 grand, if you will, or how much are we allowed to utilize? Can you get into that? Maybe we can use the example of what we're talking about today, where we were like, okay, we're looking at houses that are, around the 650 mark, which is somewhat affordable, for most people, dual income family.
Mhm.
Want to talk through that one a little bit, Brian?
Sure. So there's a couple things that's going on in the market right now. If you just look at what is called as interested party contributions, and so there are limits to what any third party can pay. So, in particular, a builder or a seller for that matter. But if you're on a conventional loan and you put 10% down, well, they can pay up to 6% of the sale price. So if we look at a house that's 650 times 6%, that's $39,000 is the max that the builder can pay. And that money can go towards closing costs, uh, taxes, and then rate buy down. And so we need to work within the laws, if you will, to allocate that money where it makes the most sense. So generally on a 650 sale price, if we're talking new construction, you're probably around 20,000 for the closing costs. So that leaves another 19,000 that we can use to buy the rate down. So we can get very um, creative when it comes to the buy downs, and it really depends on sort of how the market is at the time. So, for example, where rates are relatively, I mean, they're the lowest they've been all year right now. I think the average national average right now is like 6.58. So, believe it or not, that's the best they've been all year. So
Hence
with
why
that,
that's why we've had a major uptick in the last 2 weeks, because normally
mhm,
July is crazy, but we
yeah,
literally started school over a week ago.
right,
People are buying houses right now. It is so
yeah.
weird.
It was slow over the summer, about a month and a half ago. I mean, I've been twiddling my thumbs a little bit, but then boom, usually, I mean, in a normal market, when school gets started, it's a ghost town for about a month. But yeah, like just like you said, I mean, I've been multiple people every day, and it's a lot of it's been fueled by the rate, for sure.
Yeah. So that
So,
just goes to show you that in this market, there's no rhyme or reason anymore. It's not about, oh, spring buying market or
mm-mm.
getting in before school or anything. It's really a matter of just if it's half a point or a point, that makes a world of a difference in a payment, that people are
Yeah.
really motivated by interest rates right now.
Right. If we rewind back to maybe March, April timeframe, I mean, rates were over 7. I was like, oh, geez, we're going back to it again. I mean, we had a couple at 7.25, and
Yeah.
that was just as recent as 4 or 5 months ago. So it's come a long way. A lot of this is the prediction that the Fed's going to be cutting rates, where, while that doesn't directly impact mortgage rates, they are influenced by that. The prediction, well, there's a Fed meeting come next month. The prediction is to cut 70, 80% is the probability of that happening. Um, So we may see a little bit of a reprieve, but I mean, the consensus is we're probably going to see rates in this general area for the rest of the year. We're not going to see anything plummet down. So,
Yeah.
I mean, this is probably where it's at, which makes these builder incentives that much more important because, I mean, shoot, if we can get a rate in the mid fives or touch the high fours, I mean, that's a win. I
Yeah, I
mean,
mean, we
and
got somebody at 5.5 today, for instance, right? I mean,
uh
FHA
yeah.
loan 5.5 using the builder's incentives.
Hmm.
No closing costs. So, I mean, these builder incentives are really coming in handy when you think about it, because people, when you're buying a house, you automatically think, oh, well, what's the best price I can get on a home? But if you're not paying cash, well, here you go. We got the rate down from what, six
Yeah,
and
they would have been like 6.75, and
yeah,
it's all the way down to 5.5. And if we looked at that on a 650 sale price, I mean that equates to almost 450 a month on their payment. I
yeah,
mean that's big,
that is a
and
significant,
it got them right into budget. I mean, without that incentive, probably wouldn't have been in their comfort zone.
right, 100%. So
Hmm.
that's what we're seeing right now. We're seeing people where they're like, okay, $500 difference in my monthly payment, I can hack that, right? Especially with a dual income family, and rents are not significantly cheaper. You're paying about $3,800 to $4,000 a month to live here in Nocatee in a home, if you're lucky, a decent home, or you earn a townhome for 32, 3,300. So if you can get in your own home for 4 grand a month, that's a win, especially in a community like this where average sale price is in the 700 range or median sale price. So,
Hmm.
um, okay, so about this interest rate, everybody's talking about interest rates going down. We're all counting on it. And I hate that conversation because we don't have a crystal ball. No one really truly knows, right? We've been talking about this for what, 2 years? And like you said, it was back up at 7 in March. It's been a roller coaster ride. I did a video, was it Tuesday, where I talked about the market in depth. If you guys haven't checked that out, if you look at the graphs, it's been like this, up and down, like a complete roller coaster. Nothing extreme, which would suggest a recession of anything. I called it a reset. And so the question is, will the rates come down? And the reality is that, and it's really weird because I don't want to get political here in a minute, but I am, because I always do. Sorry, Rachel. Poor Rachel has to deal with me on Thursday nights. I'm like, not going to get political, but I'm not at home and my wife can't yell at me right now. So I'm in an office. Free game. No, but I mean, when people say, oh, well, the president will influence the feds for rates, I mean, I'll leave it at that. My point being is that, go ahead, Rachel.
I was going to say, isn't it kind of a double-edged sword though? Because if rates go down, don't prices kind of hold higher, or don't you end up with multiple bids on houses? It seems to me, even if rates come down, prices don't necessarily, it doesn't necessarily work out for whoever's buying.
Well, it's depends, right? I mean, there's a nice medium happy balance. We keep swinging one way or another. So, right, the rates go down when the job report says that we have high unemployment. And what politically what they were suggesting is that our unemployment rates were good, okay? But Brian, you and I talk a lot, and we'd be talking and going, well, I don't know, my wife works for a tech company and they just cut out 6,000 people. This company just cut out this amount because of AI and everything. I said, is the job market really that healthy? I mean, in general, is the reports from the federal government about unemployment accurate? And there was some suggestions that maybe it wasn't so accurate. And that's why the feds are getting together to say, hey, do we need to lower rates? Because if unemployment is not really where it's supposed to be, then inflation is not being controlled. So, unemployment's high, rates go down. It is a balancing act to that, right, Brian? Am I right?
Hmm. Oh yeah, absolutely. I mean, it's a tough balancing act. It was all the talk leading up until maybe the last 6 months or so has been inflation, inflation, inflation. And it has gotten a lot better. I mean, there's been a few reports where it's been a little up, little down, but all in all, I mean, it's in the twos, I think, mid twos, I guess. And so, now it just kind of falls into the job report, and so it's a constant balancing act between that, I guess, that the Fed, kind of has to deal with. So it's
So,
hard to say.
so when's this meeting? This is in September then?
Yeah, September.
Okay, so that's why I keep hearing September rates are going to go down. September rates are going to go down, and that's because I don't listen to just average Joe on the street. Okay, I'm not talking about social media stuff or the average. I'm talking big, major national builders like that belong to the National Builder Association that have people that are analyzing things and saying, okay, we're counting on rates going down in September, and you just said probabilities of 80%. I mean, where does that come from? I mean,
That's just basically the market predicting, so all the stock
all the
market, bond
analytics,
market, all the analysts,
yeah, Freddie
whoever.
Mac, all the big
Yeah.
banks and all that. That's the
Hmm.
word on the street. Okay.
Yeah.
So I
Now,
mean,
granted, that doesn't directly affect mortgage rates. So what happens with mortgage rates when that probability gets stronger? Probably what we're seeing now, and probably what we'll see over the next couple of weeks as some of these new data points come in, jobs reports, if there's any more inflation data that comes in, the market's going to proactively react to what they think the Fed's going to do. And so you may see a little bit of a trickle down in rates, which is kind of what we saw the last 30 days or so. They have trickled down, and a lot of it was kind of predicting this future cut here. So hopefully nothing derails that. But when that cut actually happens, the mortgage rates don't automatically go down. They will have already gone down the weeks, leading up to it under the speculation.
yeah,
So,
yeah, that is a big misnomer that if rates come down, then mortgage rates come down, and that's not how
mhm,
it works. I don't
mhm,
know. I feel like it's a buyer's market, but I still feel like when the builders are selling homes and they're still moving homes, that's when they determine when the incentive is going to be really good or not, or if it's a home that's been sitting a while. And I feel like they're banking in September as well, where the rates come down a bit, and they're going to see home sales go up. And you're absolutely right, Rachel. If rates came down really low again, and I say these days, people, I'm not talking about 4% or 3%. Those days are gone. If rates would just get down in the fives, like we're kind of artificially buying them down, right? And I mean,
mhm.
when a builder gives incentives to artificially buy a rate down into the fives, this is costing tens of thousands of dollars. It's just a way of them reducing or buying the rate down so it's more affordable rather than destroying the comps and reducing the price of the home. Because when you see a house sell in the comps, you don't see that the builder paid somebody 20 grand to buy the rate down. You just see the price for the house, right? Maybe in a resale, you'll see something that says concessions where the seller gave someone $5,000 or $10,000 to buy down the rate. But when a builder gives 20,000 to cover closing costs and 20,000 to buy down the rate, you don't see that. All you see is it's sold at this price per square foot. So people need to understand that. And so they don't want to reduce the comps or the price of the neighborhood because any future builds that will screw up their comps. So what they'd rather do is they'd rather buy down those rates for you to make it more affordable. And we're not talking about 2-1 buy downs or 3-2-1 buy downs. We're talking about most of these builders now are offering 30-year fixed rates at 5.5%. When you think about it, that's great. Now, if the interest rates were to go down and if the Feds were to get rates down into the fives, I think, Rachel, honestly, that our market would be very busy again. And it would almost create a situation where, because a reset for me means that our market needs to slow down, balance out, get our pricing more affordable because we become unaffordable, right? So we're trying to reset the market so that we're not just continuing steaming upwards where it's gotten ridiculous and then you burst. So I think this is necessary. This is a good balanced market. And of course, a lot of my sellers out there, if you're reading the national news, for the love of the Lord, I've been reading it today. It's driving me nuts where Zillow or somebody's saying there's way more sellers than buyers. It's completely dead in the seller's market. They're comparing it to 2008 when mortgage-backed securities crash. And it's so ridiculous because I still have people in New Jersey. I still have people in DC, Virginia area. I still have people in the Midwest, just like I talked about in the last show, and I showed the graph, that are still selling their home, some in 48 hours and some in 7 and 10 days. So to say that the whole country is flat and we have so much inventory, it's kind of a little bit ridiculous because it's not the accurate fact. It's dependent on where you live. And so, like I said last Tuesday, if you live in New Jersey or you live in Ohio in a specific area that everybody wants to be in and nobody will move because they've been there for 30 years or 20 years and they have a 2 or 3% interest rate, and you are relocating to here, so you get to take advantage of a seller's market in those areas and then move here and take a massive advantage of being a buyer in a buyer's market down here. That's gold. That's where the opportunity is right now. And I think that's what's happening. That's the people that's calling us right now. If it's not a job relocation or divorce, that's what's happening. Brian, was there something else you want to talk about? A different type of loan for business owners or something? Did you want to mention that tonight or no?
So yeah, we can, sure. I'll hit on it very briefly. So we're seeing this more and more as the market ever evolves. There was an article I was reading, and they were saying a higher percentage of this type of loan than they've ever seen. And what I mean by that is kind of a lot of this is for self-employed borrowers. And I mean, you look at a self-employed borrower's tax returns, and they're not always what they're actually making. There's well, I don't know
We're
what the nice
showing
way to
loss.
say it.
I'm a business owner. I understand. In real estate,
Yeah.
we show losses, or we do things to our taxes that basically we don't want to be completely killed by the IRS. So we're not always showing a massive profit,
Right.
or we're reinvesting back into the business. That's specifically what really, like, people that have a business where you have to buy inventory, they're buying more inventory or whatever. So their
Right.
numbers may not look like on paper that they're plus entrepreneurs and small businesses market anyway. I mean, we don't look great anyway, unless you've been around 10 years and you're making solid money every year for 10 years. So there's different ways that you can do a loan that's not just based, or you may be a newer business, for instance, or reincorporated or whatever. So tell me about this loan. I mean, this is for
Yeah.
entrepreneurs and business owners, right?
Yeah. So the first one I'll talk about, it's called a bank statement program. So all it's looking there is at deposits. So it'll look at what's coming into your bank, and we'll take a 12 or 24 month look at it, but generally a 12. And depending on what those look like, that's what we can use for your income. And we take a percentage of that, but in most cases, it's significant income that we can use, and you can qualify based on that. And then it works like any other loan. You put your down payment in this particular deal, it's 20% you would need, but you put your down payment, and the rate, it's a little higher than the going rate. It's 6.875 when the going rate is 6.5. So it's a little premium for it, but you wouldn't qualify somewhere else, for a different type of loan, meaning Fannie Mae, Freddie Mac, one of those kind of things. So we're seeing a lot more of that.
A
And
lot
then
of
there's a
VAs, because the VA rates are fantastic.
lot of VAs. VA's been, geez, it's been really good lately.
You got under 6 with one, didn't, or near 6 on a
Oh
VA?
yeah, the going rate with just no points at all was at 6%. So I mean, a lot of online lenders will charge extra points, meaning a fee for a lower rate, just to make it look more attractive. But I mean, it doesn't take much, and you're in the mid fives. So I mean, they're very, very strong. And Jacksonville being such a military town, a few bases around, we see quite a bit of VA, which is a very good loan. There's loans that are based on just 1099 income, and we see this a lot. We have a lot of hospitals around town, and a lot of these doctors are paid as if they're self-employed. They get paid a 1099. They don't, for insurance purposes. It's very, I wouldn't say rare to see an employed doctor, but we see more 1099 self-employed independent contractor doctors than anywhere else. So we see a lot of that. Well, we can use alternative documentation instead of the um, streamlined way. There's ways that if you have a whole bunch of money in the bank and you just don't have the steady income stream, we can use that. So there's a lot of creative financing, and you're not going to get a 9% rate. I mean, they're relatively good. They're maybe a 0.5% higher than the going rate, and it's a 30-year fixed rate, and you have that security of that too. So there's a lot of creative stuff coming back. The super creative stuff that led to the 2008 issues, that is non-existent anymore. These people do qualify, just alternatively.
Yeah, the
With this.
pre-qualification is real. The underwriting is real. It's not like then that's the end
Right.
of that time where anybody can
Yeah.
with their special
The
baseball cards.
right.
Yeah,
Exactly.
yeah. So, I mean, I don't, I just think people really don't like to do this, but I can't stress it, especially during these times with all this creative financing, especially all the incentives, because you can utilize your incentive. What would be more beneficial specifically for you, utilizing the incentive for closing costs or more so buying the rate down? And there's so many different ways to structure these loans and incentives and different loans to benefit each person individually. So I can't stress it more. There's no better time than ever to really understand that you guys should be, anybody who's watching out there and buying home, you have to be shopping different lenders and comparing those loan estimate worksheets, because there is some weird line items sometimes when you think you're getting a great rate. Like I was talking to somebody today, some online lender was in the 5.8 or 5.6 for a VA loan. And I was like, yeah, make sure you're not paying for that on another line item, because you could very well be so doing that.
Mhm.
So it's really important to get multiple loan estimate worksheets from at least 2 or 3 lenders and to compare and find a lender that you trust, because listen, lenders are just like, look, they're in sales like I am in real estate. Okay. There's good realtors and there's real estate professionals. There's professional lenders and then there's lenders. I'll just leave it at that without getting offensive. So it's really important that you find somebody that you trust and that's been in the business and is going to truly ask the right questions to find out your situation, to find out what's the best product for you, because people have been pleasantly surprised and go, oh, really? I can do this? Like, just like the
Mhm.
family this week, they had no idea that they could get into that house because they didn't understand all the incentives. I barely understand enough where I literally have to call Brian and go, dude, do you have 20 minutes where we can sit down? And I have to write down note for note, like how we can do this. And we kind of go off of each other going, well, why don't we do this instead? Well, maybe they can do that. So it's so important you have a good real estate professional and a good lender in this market, because it will benefit you so much. And people just, who wants to shop lenders? I mean, like, hey, fill out an application, tell me all your personal information, tell me about all your debt, your banker history. Listen, there is nothing Brian and I have never heard, and probably Rachel too, that we've never heard before. It's just life. It's what it is. So lay it all out there and see what's the best thing that you can find for you and your family, because you
Right.
might find out you don't have to rent right now.
Right. And that's the biggest thing that I find is that, don't hide anything because we're going to find it, and the worst time to find it is once you're in and you've paid for an appraisal and paid for an inspection and done all this stuff. And then it comes out that, oh, there was this whatever that I didn't mention that I didn't think it would show up, So that kind of stuff. And honestly, it may not be a deal breaker, it's just if I know up front, it just makes a whole better experience all the way around. So,
I got to give a word up to my man Tyrone Johnson, who is apparently in Tokyo, Japan right now watching. So I don't know what time it is in Tokyo, Japan, and I have no idea what the real estate market is doing over there. So Tyrone, let us know how real estate is in Tokyo, Japan, because maybe we need to leave Nakati and move out of country. I mean, people are moving to Portugal every day. Why not Tokyo, Japan? All right. I'm sorry. I had to have a little fun with this. Sorry. All right. So does anybody else have any questions? We got a bunch of people watching. If you have any questions for Brian, we're going to make him stay on for 2 more minutes because he said he was going to be a hard stop at 8:30. And Rachel, I know you have some stuff that you want to bring up. What were you going to talk about tonight?
Well, I am going to talk about cost of living in Jacksonville. I know some people have questions about that. So, I've got a bunch of news articles and different things that we can touch on. Also, just different benefits that people might not be aware of living in Florida that may actually help keep things a little more affordable, like the Save Our Homes benefit that people may not know about. It's like the tax thing. You can't tax more than 3%.
Okay.
The property tax thing.
Okay. All right.
I'll touch on all of it. We got a lot to talk about.
Okay. Are we making Brian leave for that? Is that why?
Yeah, I was gonna have Brian leave.
Brian, do you want to stay on, or do you want to take off, Brian? I don't have any questions here for you, so.
I have a 7-year-old that gets up before 6, so my bedtime's been about 9:15 these days. So
Okay.
yes,
I don't want you to mess up your beauty sleep, buddy. Any last words you want to leave with the audience or this recording for people watching tomorrow?
Sure. Yep. Yeah. I think the biggest thing right now is I think there's opportunity. I feel that much like what Greg and I were talking about in the beginning, this is as busy as really I've been in a little while these last couple of weeks, and all of it is kind of stemmed from the rates not even moving a whole lot. It went from kind of 6.7, 6.8 down to 6.5. So, and couple that with some of these amazing incentives right now, it's a very good time to buy, in my opinion. I think rates are the experts are supposed to keep them around. They say rates will be around 6.5 the rest of the year. So, if these builders are willing to buy it down, or even a private seller, if they're willing to do it, it's just a great opportunity to get in when rates are better. As opposed to maybe next year when rates are naturally coming down and these incentives go away. So it just makes
or when rates go down and they go down in September, well, maybe some of these incentives will go away.
Yeah.
I mean, I always say it's the sheep mentality. We're humans. We all do what other humans are doing. We follow the herd. Bah, bah. We're the same damn sheep all the time. Cut it out, people. When people are out there in fear, what does it say? Be greedy when people are fearful, and be fearful when people are greedy. And right now, people are fearful. So get greedy. Stop being a bah and realize that if you're in a situation where, I don't want people to go out and buy a home if you can't afford it. Okay. Brian, I know that's why I like you, Brian. You don't push people into homes. We're pretty rational people. And the same with me. I don't need a sale where I feel good about pushing a family in a home they can't afford. I don't say go and buy a home you can't afford. I'm saying if you are in a position and you think you're waiting for the right time, these are the times. School has started. Incentives are the highest it's ever been. No one is looking at a house right now, and there are apparently a million sellers out there. Okay, you see that all over the media, even though in certain areas I still can't find people an oversized home exactly to their liking, single story, blah blah blah, in this price point. But there's a million homes out there. If it's a buyer's market and you have all these incentives and everybody out there is waiting, then don't wait for the feds to roll down the interest rates. Take advantage of the incentives right now and lock yourself into a 5.5 rate, because they're not going to go down to 5.5%. Let's just put it that way. So.
And there's some at 4.99 that are out there. I mean, these builders are throwing, like you said, tens of thousands at these rates. So it's a good opportunity if you're in the right position, for sure.
Yeah. Well, I gotta tell you, it depends on what builder it is. I did a whole show on that too. So be careful on some of these incentives. You don't want to go be buying a house because the incentives and the closing costs are fantastic, and then find out your house needs to be completely rebuilt right after the bumper to bumper warranty at 1 year. Sorry, not being negative, but you never know. Different tiers built. All right, Ryan. Yeah. Thank you so much. Right. Guys, if you want to get a hold of Ryan, you can contact. Sorry, I'm in my office and the cleaning crew just came in. That's nice. Thank you. Now I know the cleaning crew comes at 8:30 at night in the office. Apologize for that. Was it loud? Did you hear that?
Yeah, the joys of a live show.
She had headphones on. She came right in here. All right, straight in with the vacuum attacked me. I'm okay. All right. Yeah. So what was I saying? I forgot. I lost my train of thought of vacuum just attacking.
Yeah. Yes. Call Greg. You can get my number. How about that?
Yes. I was about to say, for sure, you really want to make sure that you, here you go. We don't need to we'll let BRF say it. Greg was our realtor. We were not satisfied with the lender we had chosen, so he recommended Brian. We had a great experience with Brian. Brian's the real deal, folks. I don't just talk to anybody or do business with anybody. It takes a lot of relationship building, and this is a relationship that culminated over a long period of time. And Brian is a preferred lender for some of the builders in town as well, and that takes a lot with a good reputation. So honestly, you need a good lender out there. Call me. I'll also have his information in the description as well. That way you can get a second opinion, be smart about it, and be with a professional. And so that's definitely Brian. Thanks for that comment, BRF. I think I know who you are. All right, Brian. Any other
I have an idea too. Nope, all good.
Take
all right,
care.
appreciate you having me on.
Yes.
All right.
Thanks for always coming on. Appreciate you.
See y'all. All right. Bye.
Bye.
All right. Let's get to the doubles.
There we go. I think I got it.
All right.
So there we go. I'm going to go ahead and work on sharing my screen. So give me a minute.
Great experience with Greg too. Thanks. Of course. I hope so. But yeah. Thank you.
Okay. All right. Can you see my screen?
I sure can.
All right. This article popped up today. So we're talking cost of living in Jacksonville. This article popped up today. So this is news for Jax. In Jacksonville, new construction is emerging as the more affordable path to homeownership. I thought that was just so surprising, but I think this touches on what you and Brian were talking about. The price gap between new and existing homes hits a record low. So that, there's that gap, but it's all those incentives that you guys were talking about. That's really just making a big difference to people's, monthly payment. So buying a brand new home may no longer mean paying a big premium.
No, and let me ask you something, Rachel. I mean, you're in the news background. That's why I have you on my team. You're local to the market. You're from this area. You left and came back. Is it common knowledge to the person that's not really looking for a house right now that this exists? Is that even when you read this article, is it surprising to you?
This was surprising to me, particularly because when we were looking 2 years ago, those types of incentives that you guys are talking about now, those weren't really there.
No.
So for us, we ended up going with an existing home, and it was better for us.
Yeah.
Just with everything that was going on and just timing and all of that. But so I was really surprised. I didn't know all that about buying down the interest rates. I didn't know. I mean, I knew that was something you could do, but I didn't know that was something that builders might use to incentivize people to buy with them.
Yeah, it's very interesting. I genuinely didn't realize either that they were the incentives were as large as they were with some pretty decent builders. And then some of them, they claim to have great incentives, but they're not really that great. You still have to negotiate it. So, but I love that this news article is out because it's kind of educating people and making them realize, hey, there are some really good opportunities out there if you know where to shop.
Right. And I mean, for me, really, I wanted an existing home anyways, just because I remember walking into one of those new construction model homes and they were selling me on this idea that I could even pick out where my plugs would go. And I thought that was just too many choices. So for me,
yeah, it can be very overwhelming. Well, that's why
overwhelming. But
that's why the quick move-ins are a good option. But the reality is probably when you were shopping, there wasn't as many options as there is now in our area.
Right. I mean, 2 years is a big difference in real estate. So
huge
difference. So I just thought that was a really interesting article, especially to pop up today of all days. We're doing this show. So
cool.
Then I found this article too from the Florida Times Union on Jacksonville.com. Cost of living in Jacksonville. Find out what you need to live comfortably in 2025. So families, so this is an estimated household income needed is about $118,000. So if you're dual income, that feels pretty doable. And I know for some people on one income, that's also doable. So I think just thought that was kind of interesting. So The study used data from the Bureau of Labor Statistics, Zillow, and the Federal Reserve to calculate what it takes to maintain a balanced budget in the 50 largest U.S. cities and ranked Jacksonville at number 33 for highest salaries needed. So I guess that's a little high, but to me, I thought that was still pretty reasonable.
Yeah, absolutely. Again, that would be for Jacksonville. Some of the suburbs like St. Johns County or Nocatee might be a little bit higher, but like I said earlier, when we were talking to families today, we were talking about dual incomes or someone with a pension. We have a lot of firefighters, police responders from New York City that have amazing pensions, and they have a spouse that works, and so they're able to do it. They're able to make it work easily. So if you were in a New York or a California, whatever, 150 grand would get you anything, really. I mean, you'll need 300 grand basically.
Right. And I want to point this part of the article out here where it shows, different cities in Florida.
Yeah.
You can see Jacksonville, Tampa, Orlando, Miami, and the difference in the incomes and the median household incomes for those areas and the median home prices. I mean, it jumps up a lot. Median home price in Jacksonville versus Miami, I mean, it just doubles. So just, if you're looking around all of Florida, it definitely is, compared to these counterparts, definitely
a big difference.
A big difference.
Not even mentioning home insurance. I won't even go there. But anyway, cool.
Right. So also I want to share this tab. I went to pay scale cost of living in Jacksonville, Florida. It's 8% lower than the national average, 15% lower housing than the national average, 10% lower for utilities, but it says 4% higher for groceries. So just something to know.
That was so weird.
I know, I thought so too, but really, I guess, I think you can get creative. Like, they're building a bunch of new Aldis, which I love Aldis. So
I know I'm beginning to think you're a spokesperson for them, and you're getting something in the back end from this. But I'm
getting nothing. I just love Aldi.
Trader Joe's. And then you're like, Aldi's. And I'm like, Trader Joe's, Aldi's. All I can tell you is right now is it's one of the biggest complaints I do hear, ironically, since you're saying this. I genuinely do hear people say that groceries are outrageous. And that's just because Publix rules the roost here. They're on every corner. And so you end up going into your local Publix. The new stores are absolutely gorgeous. But the groceries are expensive for sure. Yes. Unless you're doing your BOGO hunting that you mentioned in one of our shows. Right. But it is true.
But I agree. Publix can be a little on the pricey side. It's a lovely shopping experience, and a pub sub is hard to beat, but groceries can be on the pricey side. I think you can get creative. If you shop at different places, Aldi, Costco, BJ's Warehouse, if you're military, you can hit the commissary. So there's a lot of different options and ways to work around that grocery bill. But I would agree that groceries are a little higher.
Yeah.
I also want to share this tab. So cost of living in St. Augustine. So St. Augustine was the closest city that I could find for like the St. Johns County area. Cost of living is 3% lower than the national average, but housing was 14% higher. So I think we can thank Nocatee and Ponte Vedra Beach and all that for some of those higher housing costs.
Well,
some builder incentives, and they're just, it just looks like it's higher. Who knows?
Maybe, because you're right. You don't see the pricing on the back end, but it is expensive. The reality is, though, and St. Augustine's a little bit different than North St. Johns County. If you're in South St. Johns County and St. Augustine, you're going to have higher costs there because the property taxes are higher in the city limits of St. Augustine, St. Johns County than outside of St. Augustine city limits. So there's a bunch of variables there. Also, home insurance will be a little bit higher down there because you're near some flood zones. It just depends on where you are. It's so big and vast. It's hard to really tell. And then, of course, you are not seeing, this is not counting all the incentives that we're talking about. And then finally, what's the other option? If you live somewhere in Duval or whatever, and you're not happy with the schools, like the family we talked about today, you're paying for, if you're lucky to get into a charter school, or you have to pay for private school. So that's why people figure, okay, I'm not paying for private school. Home insurance is relatively good here. So it's a give and take in different areas.
Right. Yeah, you always have to weigh all of those things and see,
Yeah.
what, how that's going to impact your particular budget.
Yeah.
Also, Florida's minimum wage, it's actually going up. So our minimum wage will increase to $14 for non-tipped employees and $10.98 for tipped employees on September 30th, 2025. And as I was reading this article, I thought, is that why every place I go now they have that little tip thing? Like, I wonder if that's like, oh, it's why everywhere now has this line where you can tip so they can pay people less. I wonder. It's
Maybe.
my conspiracy theory for today's show.
No, you might be right. I mean, listen, the cost of living is up. It's incredible for me to say, oh, wow. I remember when the minimum wage was $4.50. Then it was $5.50. Then it hit $7. And I was like, whoa, that's incredible. And now you're telling me $14 an hour is going to be minimum wage.
Right. And they're increasing gradually, and it's going to be $15 an hour by 2026. And that was approved by voters in 2020. So,
and that's here in Florida.
Mm-hmm. Yep. And the minimum wage the federal minimum wage remains at $7.25 per hour. So,
wow, that's a vast difference.
It's a huge difference. And that recent study has mentioned again that a Jacksonville household needs $118,000 annually for a comfortable living. So,
okay.
So it touches on that again, but just interesting. Minimum wage is going up a little bit. Also, I found this article. This is Understanding Your Property Taxes, Save Our Homes, Portability, and Homestead Exemption. I highly recommend going and finding this article. This is the midfloridiannewspapers.com, Four Corners Sun. This was written by a Polk County Commissioner, Bill Braswell. That's an area kind of between Orlando and Tampa. Anyways, this is just something to note. There's the Save Our Homes Act, and I'm just going to try to sum it up really quickly. And I have notes here. So under the Save Our Homes Act, the assessed value of your home, meaning what they tax you on, can increase annually by the lesser of 3% or consumer price index, regardless of how much the market value of the property rises. So, for example, if your home's market value spikes by 15%, your assessed value will only increase by up to 3% or potentially less. Is everybody following me?
Yeah. So if it's your homestead, it's your main home, right?
That's where you live. Yes, it's the main home.
Yeah.
So another piece of this puzzle is that when you sell your home and you purchase a new one, you can take that, like the Save Our Homes Act is portable. So if the assessed value of the new home, that will be set at fair market value. But then you can subtract any portability, and homestead exemptions are carried over. So if you sell a home with $150,000 in portability, meaning that's the difference, like in equity, then it will subtract that amount in your assessed value of your new home.
Right. So just like the homestead works, basically it's saying, look, if you're a homestead and you're a couple, you're actually they're reducing the homestead by $25,000 per single person, $50,000 per couple. So if you're a couple, you save $50,000 on the appraisal value of your house. And I try to explain that to people today. Whatever you buy your house at today is a valuation of what your house is worth, and that's what you're paying your taxes on, minus the $50K if you're homesteaded. But if you already have a home, and I think it's only in Florida, of course, and you have a home and you're buying a home of greater value, and you can port your old tax savings into the new property, which can save you significantly more than $50,000 less appraisal value, up to, I don't know what the max is, but
it's up to $500,000.
$500,000. So that's a heck of a savings.
Right. So that's just one of those things that Florida's trying to do to help everybody who lives here. I mean, currently, and I guess, when you buy in that's something just to know, that you have some help there with the state of Florida so that your property taxes, I mean, what you said in 2020, I mean, how much did prices rise like since then?
Oh, I mean, 33%, I would say, somewhere in a 30% range.
Right. So people who lived here already aren't paying taxes on that huge jump.
No.
They're paying, 3% more each year. So
Yep.
it's just a small uptick instead of like these huge jumps.
Yeah. Be careful when you build a pool. They
to
will
know.
reappraise you, and you'll be paying more than the 3%. I learned that the hard way, but I guess you can contest it as well. But I don't want to get into all that because we don't have a lot of time left. So I'm going to let you keep going.
Okay. Well, I'll keep this.
Another reason to have a real estate professional guide you.
Right, exactly. Property tax is being considered in Duval. The current millage rate is 11.31 mils, or about $11.32 per $1,000 of assessed taxable property value.
Look
But
at
the
you.
proposed is $11.19. So you'd save about 20 cents per $1,000.
There you go.
So
Wondering why they're doing that.
well, they're considering it. Actually, this next article, one of
They try to be more competitive with St. Johns County because our millage rates are lower than Duval County, and people are surprised when they hear that Duval property taxes are more than St. Johns County.
Right. So I think that's part of it. I think they're also just, recognizing that, inflation has hit over the years, and they're trying to do what they can, because even if they drop the tax, the millage rate, the value still went up enough. So they're still getting a good chunk of money.
Yeah, because the appraisal values are going up because we've been pushing our valuations of our homes up so high with all the influx and relocations here to the States. So.
Right. So they're just trying to do what they can. And it's the same thing in St. Johns County. They're signaling lower property tax rate. I mean, these are all things they still have to vote on. And there's multiple parts to your tax rate. So for St. Johns County Commission, they're talking about, they approved a rate of 4.46 mils, but that's not the only millage rate that is in your tax bill. So there's more to it than just that. So just know that. And then in St. Augustine, they have kind of the opposite. Property taxes may be on the rise in St. Augustine. So just kind of interesting all around the area. Taxes are kind of moving up and down. And then also Florida property tax debate heats up as DeSantis eyes big cuts. Governor DeSantis has criticized local governments for increasing property taxes, but he's also signed state budgets that benefit from those same increased revenues. So, just something to know.
Yeah, where's the money going to come from, right? If you cut it, where's it going to come from? It's got to come from somewhere.
Got to come from somewhere. But he is pushing a large property tax cut to be on the 2026 ballot, raising concerns among Democrats about the impact on local government budgets. So just a lot happening. This is that time of year where they're all talking budgets. So just something to pay attention to. And then also, I just thought this was an interesting article. Evictions spiking in St. Johns County, while this surprise town bucks the trend once again. So Putnam County is the one that was the surprise town. It's an unexpected outlier, with evictions filings actually declining during that same period. But what I thought was interesting, so when adjusted for renter households, the eviction rate rose from 27.73 filings per 1,000 renters in 2019 to 36.31 in 2024, a jump that signals mounting housing pressures in the county. But I thought this was interesting because I wonder if it's actually tied to all that homestead exemption. Because if you don't get homestead exemption, you don't get that if you're renting your house out. So if you're owning a house and you're renting it out, you don't get that exemption. So your tax rate's going up. So you see what I'm saying? So your monthly payments going up, and then you kind of have to pass that along to your renter. So earlier when you were saying you might be surprised if you're renting that you actually might have a better deal buying.
Yep. I
So
agree.
I think this is all sort of part and parcel with all of that.
For sure. That's
See.
why I ask a million questions when people reach out to me to purchase a home. I always have to ask all those questions, find out truly what's your situation, because you just never know what could be a better option for you.
Right. Also, Florida falls on the list of most moved to states, but where does Jacksonville fall? So Jacksonville was ranked 10th on the Pod's 2025 list of most moved to U.S. cities. It's down from 9th in 2024, but still, I think, hey, we're in the top 10.
We're still up there, baby.
Yeah, we're still in the top 10. Also, we have what city in Florida has the lowest cost of living. So this is the 10 most affordable places to live in Florida. I want to point out that 8, 9, and 10 are all in the west side of Jacksonville.
Okay. Wow,
so,
that's incredible.
Yeah, 8, 9, and 10. And they're kind of right next to each other. So here we go. College Gardens is right here. Mixon Town's right here. And if you zoom in, you'll see Newtown here. And this is part of the downtown area. So right next to it, you see, you've got Riverside, and, the Cummer Museum of Art, which is a beautiful place to go. So you can see all that's right there. So I really think it's affordable now. And we did that show about all the new development that's coming to downtown.
Yep.
I think those areas are going to be pretty popular.
People keep asking me about the agri neighborhoods that you were talking about in Clay County and where you found that. So I need to get that link.
Oh, okay. I'll get that to you. the agri-hoods.
I think the agri-hoods are a great idea. And the person I mentioned it to, I was talking about the one in Georgia, Serenbe, which has done really well and property values skyrocket and people love living there. Someone said they knew one outside of Chicago or an Illinois area, and they said the property values went up there too. So it must work.
Yeah. Well, I think people do. I mean, everybody likes a little space and a little, place to call their own. A little
organic town where you can grow your own stuff, man.
Yeah.
Yeah.
I mean, I even have my little pots in the back that have my, sad tomato plants, but
there you go.
I try. Also, if you're moving here, Mayor Deegan unveils State of Jax site that will give interactive census data comparisons. So if you're just about to move here and you just want to have different things that maybe you want to know about, there's a brand new site. What I thought was interesting is that one of the guys that was working on this site with Mayor Deegan, he was in Tampa, and he was trying to help the leaders there. And they were trotting out the region's vanity rankings to woo the company. And they learned the company had done its own research on the state of the community. And they had this aha moment that the company knew more about Tampa Bay's challenges than we actually did. So this was a site they put together to try to, kind of avoid that. So this is the State of Jax website. And you can kind of see different stats that are popping up. So number 2, Wall Street Journal's hottest job markets overall, Wallet Hub's best places to start a business. Number 4, it says Oxford Economics Global Cities Rankings, number 161. So this, you can kind of go through here and just click on a lot of different things. So I loved this particular piece. So you can click on peer cities comparisons and you can see rankings among other cities. So you see Jacksonville, Orlando, Tampa, Miami. So if you're considering Florida in general, and you're just really not sure, go look at the State of Jax website and see what things, click for you, what matters, what do you need to know? And you can look at this.
That's good information.
So that is pretty much all I have for you tonight.
Oh, wow. We made it just in time.
I zoomed right through that.
You did really good. Thank you for sharing all that information. I hope people found this informational tonight. Again, not a whole lot of comments. We did find out that it's 9:31 a.m. in Japan. I reside in Jacksonville, close to Seven Pines, and currently deployed here in Japan as a service member. I really enjoy watching your Toll Brother Homes you show. I do a lot of Toll Brother home tours, do a lot of business with Toll Brothers. A lot of people like the Toll Brothers, specifically the people from the Northeast. But hey, Tyrone, appreciate you watching, man, from Japan. I guess you're missing a little bit of Jacksonville, so you're joining us tonight. Thank you, and appreciate and thank you for your service. So fortunate to be in a place like Jacksonville where we have a big medical community, but also a big military community. And that really warms my heart because I have some folks relocating for, because of the military. And I love going out with them. And I love these VA rates that they're getting too. So I just feel like it's a win-win. And I love that we have that mix of military, medical, and then we have so much other industry here that people don't realize with our logistics and everything going on. So super exciting. Ms. Rachel, thank you so much for tonight. I appreciate it. I was like running here in the rain because my internet went out because of the lightning, and I was like,
I'm so glad you made it.
I always make it last minute. I'm crazy. Been a crazy last couple of 10 days, literally, with all the people in town and visiting and all the sudden uptick in the market has been insane, and you never expect it right after school starts. I think I'd be taking a rest right now, but it's not happening. But that's all good. So, folks, I hope you enjoyed the show. If you're watching this in recording, still put your comments in there. If there's anything you'd like us to do in any future shows, we're always looking for ideas. And you guys never put in the comments. So when you watch this recording and you're at the end, put in the comments if there's something you want to learn more about. Anything in the Northeast Florida area, we'd love to cover it for you. And of course, if you're thinking about moving to the area, I'd love to be your resource of choice. You can call me, text me, or email me, and be pinned in the description below. And we'll go ahead and have that conversation, whether it's 9 days, 90 days, 180 days. It doesn't matter. It's never too early. Start the conversation, start learning more about each other, how I work, but more importantly, what's going on with you in your life and your family? What's going to be best for you? Is this the place for you? And then, of course, if you're trying to sell right now, I don't recommend it because it is a buyer's market. But if you have to sell, make sure you find a good real estate professional that's going to give you an honest opinion about what your home is worth and truly go through the marketing efforts to get it on the market. I don't kind of mince words and really tell you exactly what the valuation is. But if you're just trying to throw it up there to see what you can get, don't call me. I don't do that. I don't want you to sit in the market for 6 months and devalue your home. That's not the way to do it. So that's it, folks. It's Thursday night. We have another video coming out on Tuesday where we actually got footage of the Florida Coastal Highway, exactly what neighbor Florida, First Coast Highway. At least I didn't say the Pacific Coastal Highway this time.
It's the First Coast Expressway.
Yeah, First Coast Expressway. I'm fatigued by this time of night. It's such a long day. We actually did some really cool footage of literally where it goes, every neighborhood from the Shands Bridge all the way to 95. So I had a lot of people asking, where's it actually going? Well, we flew a drone today. We stopped a few neighborhoods and talking about what they're doing and how close it is and all that good stuff. So if you're up for that, make sure you subscribe. That way you can be notified when that video comes out on Tuesday. And we'll be doing this again next Thursday night at 8 p.m. Ms. Rachel, thank you. Have a great night. And thanks for watching, Jacksonville. Until next week.